Good morning, and thank you for tuning in to another edition of the Vulcan Report. Hope you all had a great and exciting weekend. This video is for trading on Monday, February the 29th, leap year, and the time now is about 2 minutes before 10 a.m. Eastern Standard Time. Market's been open for almost a half an hour. As you can see here, this is a chart of the silver futures chart. I'm going to try to go through several of these real quick. We're now testing this support line right here. Market's trying to build a support to muster up enough energy to retest the 1540 trend line resistance and break back into the Kumo cloud. So this will be interesting this week as 1540 is now in play. Strong support is at 1387. All right, this is going forward for silver. Now let's take a look at the gold market real quick. Gold has been holding up very nice, and I'm hoping that it will help lead and push the silver market higher. As you can see here, gold is trading outside of the Kumo cloud. It's above the Kumo cloud. Nice baby bull market here, and the trend lines are trying to cross up here. This purple line is trying to cross above the orange line, which is the longer term trend line support. And so right now, strong support at the 1200 mark for the gold. Second support is going to be around the 1147 mark, which is the bottom side of the Kumo cloud. Still inside the cloud, not below it. So still bullish. Once these two lines come above this Kumo cloud, then it's a strong bull market. But right now, the market's still bullish, looking really nice right now. All right, let's take a look at what could stop or make things worse. Crude oil market, as I've been saying all along, nothing really happening here. We're just trading. Riding the trend line here, the shorter term trend line. That's all we've been doing is riding it, popping up above it, setting up for the next leg down like we did here. Boom, next leg down. Technically speaking, let's see, let's measure the boom. This right here was excuse me, a high of $50.90, a low of $45.20. Then we lowered the boom to 26, so that's about a $20 run. So, all things being equal, the next leg down on this would send the crude oil to about $13 a barrel, which would spike. I assume if we do that, it's going to be a spike low, because again, the average range for crude oil is $15 to $30. So if we clip that 15, I mean, we haven't been down to 15 since the 90s. So if we do hit that $15 a barrel and spike below it to like 14 or 13, then yeah, it's gonna be amazing. So right now, I'm gonna say that's in play for right now for the next 12 to 18 months. That's what we're looking at. All right, we're looking at that. And really, I'll be honest with you, all timelines being equal, I would say we have about 20 weeks. In the next 20 weeks. That's about how long it took for this to play out. So I'll give it 20 weeks on the crude oil. That's what's in play right now. Upside resistance currently is $35.68. That's the first trend line resistance. And then the second one is at $46.02, which is this orange line right here. And if it can get in play, then it'll push itself inside the cloud, and we go up to $70. All right. And that will be the new support for the bull. The next bull, all things being equal, if this market was to turn bullish today, that's the new support for the bull market at $70. If it can get there. That's a long way away, and we have a lot of overhead resistance long before then. So right now, I still see this market still in a bear market. And right now, the first initial sell trigger is going to be around, let's say, $30.40. If the market breaks $30.40 this week, then that's the first sell trigger to take you down back to, to take out 20. So the initial target for that short is going to be the $20 handle. So that's going to be good for a nice $10 run. All right, let's take a look now at the dollar index. It's running around here. Remember the last video? This support line is holding and managed to get above this resistance line here. It's trying to hang in there. It's a do or die. Remember I said the do or die And that's what we did. We didn't crack this trend line support. We just did like here, test, bounce, rally. So test it again. Now it's going to try to rally. Overhead resistance though, strong resistance is at 99.79. It's going to have to get above that. It's going to have to crack it and close above par and make another run for par if we're going to see this thing, strengthen up here. Chances are it could do it. But in order for that to happen, some other things are going to have to be terrible over in Europe. Let me just pause to say, as far as Europe goes, I believe Europe is going to be the first to tumble. That British pound is telling a big story right now. I think that London British situation is going to implode on itself and take the rest of the euro with it. So I see the pound falling first, euro falling second, and then the dollar after that. It's like a house of cards or a domino effect. But I don't think U.S. is first. I think the crown is first. The crown falls off the head first, and then it makes everybody else fall. But yeah, I think Europe and the U.S. are in deep financial trouble, and I think the charts are going to reflect that. But in the shorter term, as troubles over the ocean are manifesting themselves, there will be a rush to the dollar because the dollar is still the world reserve currency. So in the short term, I see powering up back above par and strengthening from there on before all is said and done. So any collapse in the dollar, any talk about that right now is not showing up in the charts. The only thing showing up in the charts is this run above par. Again, anywhere from 103 to 107, 108. I think that's going to be the target in play over the next 12 to 18 months. All right, let's take a look now at the S&P 500. All right, the S&P is trying to say we've put in a bottom, and it's trying to rally. Well, guess what? Weekly resistance is at 1979 3/4. All right. Yeah, it can do it, but that's going to be a strong resistance. If anything, that's going to set up a strong sell signal, and bears are going to try to attack that market really hard. So 1979. We're at 1942.5 now, so that's if you're gonna get in there now. I mean, I wouldn't, but if you did, that's gonna be your initial profit target, because anything short of that, I see that being sold. But again, that's just me. It's like here, you thought you were rallying here, and then we collapsed utterly. You don't want to be set up like that again. Again here, look, collapsed utterly. Look at this, collapsed utterly, collapsed utterly. Got to see it setting up for the next situation. So we'll see. But again, that 1979 is in play. I'd watch that as of right now. I would strongly watch that. But I gotta be fair. Let me give you all the signals. The day trade signal on this one, I believe it was 1943. So there's still, you can still get in there. The overnight low though is 1927 3/4. That should be a very strong support. I don't even see the market testing or taking that out. I think it's just going to let the overnight supports ride in these markets for today. So I see Monday as being a somewhat flat to slightly higher day. Very quiet day today. I don't really see any fireworks. Technically, I don't see any signs pointing to that. But one thing you got to note, and I'll pull it up now real quick, is the NASDAQ. The NASDAQ is not playing ball like the rest of the other markets. Its chart is a little bit weaker because it's still in the cloud, the Kumo cloud of death. The last time we got up to this level, we collapsed utterly. I think we're setting up for the next collapse utterly. in the NASDAQ. This overhead trendline resistance is a strong one, and I just don't see anything taking that out right now. So you're going to want to keep your eyes and ears open on this one. And let's see here. I would say projections overhead 43.83 and a quarter is the top side resistance for this week. As far as support, the overnight lows, if they can hold 41.84 and a half, it's going to be your overnight low. If that's taken out in the NASDAQ, though, I'm going to have to tell you that 41.24 level is going to be in play, and if that's a sell short price trigger. If that's taken out, then we're going to head back here and test these lows and probably take it out. So that's just a warning in the NASDAQ. All right, let's take a look at something for you equity people. Apple is long-term down channel, starting to try to level out and build a base for the next upward move. If it's going to make a run, it has to get up to 103.14 and close above that. Currently, you're at the 96 level, and you're going to have to watch it. Strong overhead resistance at 106.46. All right, and then the next target from there is 109.37. So that's what you're going to be watching on the Apple, as right now you're starting to approach the overbought level. And I'm going to have to call this like I see it and tell you that really it's still a hold on the sell short side. It's just too much short interest in this market right now. The last breakdown was here, and as you can see, I think we're going nowhere here, but that's just my opinion. Technicals say watch for the upside target. The weekly target is 106.46 in this market. All right, let's take a look at goog. All right, it's flat but still bullish, trading above the trend line support. Overhead resistance here for the week is 782.41, and you don't want to see a close below the 654.13 trend line support here. And this market is also flat, and it's neither overbought nor undersold, so it can go higher or it can go lower. All right, and let's see here. Here's a special one. This is the live cattle. I understand some of you trade the cattle futures, so here you go. It's trying to test this overhead resistance at 139.68. That's where this overhead resistance is. Support is at 125.45. So you don't want to see a close below the 125.45 because that would be a sell signal. Right now, the market is trying to overcome and say that this is a bottom, so it's trying to put this bottom in and make a run. After the 139.68 resistance, your next one is the bottom of the cumulus cloud here, and that's above the 145 mark, getting in closer to 150. So we'll just call it 150 for now. So 150 is the total upside target for the week in the live cattle, if it can do it. But you're in jeopardy at the 125.45. Alright, taking a look at the notorious coffee. Alright, coffee right now, flat, dead in the water. Sideways to lower prices within the next 3 to 5 days. Getting in and oversold, but it's probably going to lock in. I just don't see anything going on here. Upside weekly resistance is 122.43 right now. So this is a short, but I wouldn't be looking to put in new shorts here. You'd be holding current shorts from back here. I know it's one of those markets. All right, let's look at sugar. Sugar says I am still bullish. All right, it's above the trend line. Yeah, you got more exciting action here. Right now, you got weekly resistance at 14.38, Strong resistance at 1450. So we're going to round this off and say 1450. A break above 1450 is bullish and a buy. And that would put in a long, even though you're overbought. What that means is, even getting in an overbought state, this market will lock in for the next bullish phase and take off. Alright, and that's where you are now, off to the races. And your upside target, if that's broken out, is $16. Alright, and let's see, am I forgetting anything? I don't think so. I think that's where we're going to stop for right now. Alright, so remember, take what you can, give nothing back. Have a great week, and as time permits, when I get a chance later on today, I will update the blog with all of the price triggers and support and resistance for everything that I covered in this video, and I will try to include a few more. So be encouraged and have a great week. Remember, take what you can and give nothing back.